Hey, Marco, thanks for being here.
Hey, John, how are you? Thanks for having me.
Yeah, doing well, doing well. I'm really excited to kind of talk to you. I know we've talked several times in the last couple months about a lot of things over there at Beacon Street. I mean, you guys kind of, I think, shocked everybody with your announcement on the SPAC. That really kind of got everyone's attention. But I think more interesting to me has been our conversations around kind of where the industry's going. I think you guys have a really great perspective, and that's kind of what I'd like to run through. So in my mind, there's three things I'd love to kind of get your take on today, big buckets. So first is basically this rise of the retail investor throughout capital markets, and kind of how this meta shift that we're seeing with like the individual investor having a huge impact on markets in general, how that is affecting our industry and kind of the opportunities and things there. And then the second thing that I want to talk about is kind of the changing landscape for media and publishing within that larger context of financial services and everything else. And then finally, I know like as head of business development and strategic development for Beacon Street, you've done a lot of acquisitions. You guys are doing strategic alliances. And so I kind of wanted to dig into what kind of things you're looking for, what kind of things are exciting to you guys, and just kind of how that looks for you.
Sure.
First off, like, so the rise of the retail investor, the stats on retail's impact on capital markets that I've been pulling together are pretty, like, they're kind of shocking when I look at them. So Goldman recently, excuse me, Goldman Sachs had this report recently where they were talking about retail investors actually own more of the stock market than at any other time in history. It's something like 35% of the equity market is owned by households. And then not only are they owning more of the market, they trade way more often than they used to. And so from like 2019 to this last year, like the major brokerages have seen a 300% increase in daily trades. And on top of that, the retail trading dollar value has actually gone up about 85% year over year. And so that means that I think today it's like 20 to 30% of the daily, or 25% of the daily volume is retail trading. And so like with that as kind of the background, like how are you guys thinking about this? Like this kind of shift in essentially our customer base, and what it means for like your business and for our industry.
Sure. Yeah. I mean, I think, you know, I think you called it the rise of the retail investor is something it's not been overnight. It's really, you know, really started a couple of decades ago when you started to see the discount brokerages come into the marketplace. And then once I think the online brokers did a really good job of taking the mystique and the friction of investing out of by making it easier for the retail investor. You know, I mean, our parents, they had to, you know, you had to have a stockbroker, which usually was your uncle or a friend of your neighbors or something like that. And back then you had to have, you know, a six-figure portfolio to even, you know, get a ticket to the party. And so, you know, and I know this term is overused, but the democratization of the investing opportunity for the retail investors has been a great tailwind for us and for obviously for the whole industry. But where I think the opportunity lies for us, and that'll continue to grow. And I mean, we could talk about all the stats, but I think everyone knows that it's a huge tailwind. Where we see real opportunity is a lot of people, you know, they get in and they start investing, and they start by getting their information on the news, which, you know, what's the saying? You know, buy the rumor, sell the news. The news it's too late at that point, or they're getting it from online message boards or cocktail parties or whatever, and that's not really a strategy, right? So those that actually stick and you know, take to heart of pursuing, you know, taking control of their finances and their investments, they come to realize pretty quickly that they need some guidance, right? It's, you know, it's great that you have a car, but if you don't have a driver's license and you don't know what you're doing, like it's not ever going to work. And so that's obviously where we come in, and I think it creates a tremendous opportunity, you know, for us as a business, but really for the whole industry, to educate people and in a certain way. And this might sound kind of corny, but it's almost like an obligation to fill that void, because you see so many retail investors get burned, and we saw it earlier this year with Wall Street Bets and the GameStop situation. And and there's certainly a lot of smart people out there on the message boards and all the rest of it, but it's more than just buy this stock, right? I mean, this it's portfolio allocation. It's what are you trying to achieve, and and I think in general you see a trend of people sort of taking over different aspects of their lives, including investing. A lot more do it yourself, and so us being able to bring that research, that education, that knowledge to people is where we see the opportunity, and that's just going to continue to grow. Also, because the younger generation, as they come up, the millennials, and that's also an overused term, but the millennial generation and are just much more comfortable taking control of their own finances. I mean, the stat I saw was that 72% of millennials identify as self-directed.
Yeah.
So they're just much more comfortable, perhaps, maybe than the previous generation in terms of taking control, and so that's where our content, and being willing to educate themselves with our content is, and our research is going to be helpful, and that's just going to continue to grow.
Yeah, it's such an interesting thing, because take the millennials, right? Like 72% are identified as self-directed. It's also the largest generation in human history. Mm-hmm. And they're not even, and they're trading and investing way earlier in their life cycle, basically. And they haven't even reached the prime kind of market obsession years that we've seen in the past.
Sure.
And so not only do we have more people coming into the market, I feel we're seeing this huge bump before they even hit what we would consider their prime years to think about and worry about their investments. And so
that's right.
It's a huge sea change.
Right.
And like you said, it's a tailwind.
Yeah, and there's a couple of events that have happened in recent history that have sort of accelerated that. For the previous generation, the boomer generation, and they've also embraced taking over control of their investments, but they started much later in their life cycle, right? Because the technology wasn't there, 30 years ago, in terms of being able to trade on your own account, at least with the ease that exists today. But also I think most people, like in our generation, we and I know you're younger than I am, but just for purposes of
not by much, I don't think.
Our generation, you graduate, you worry about student loans, you worry about saving money for a house. You're not really thinking about retirement in your 20s, right? Now I think there's a lot more education out there about, hey, you need to start thinking about retirement in your 20s and time value of money and all that. And so people, because you're also able to start with smaller amounts. You don't need 6 figures of savings to go into the market, right? Like you did, a couple generations ago, or at least the perception was that. So that, I think, also makes it easier for people to start to educate themselves. And there's a lot of free content out. Some of it's bad, but some of it's also good. And people who are willing to invest the time to educate themselves, there is information out there. And then as you go along in your sort of education trajectory with respect to investing, that's where financial research, subscription-based financial research, ends up being obviously really helpful if it's well guided and grounded in good research.
Yeah, and there's one I want to go back to something you said earlier, because I think that because so much of the roots of our industry has been very kind of direct response heavy, marketing and copywriting for a lot of different groups has taken, I'd say, precedence over the quality of product. And one of the things that always struck me, particularly about Stansberry, is I remember a few years back, and this would be, I'd say, going into the Bitcoin real kind of right before it went parabolic, when everybody else was just diving in on any product that they could use a Bitcoin kind of hook on. They would sell, didn't matter whether it was good or not. And I remember that the Porter didn't do that. And I remember at the time, a lot of people basically doing what they always do when something that they're doing works that somebody else isn't doing. And they started kind of like talking like he was missing the boat, that he had like this old school idea. And that old school idea was actually taking care of the customer. And fast forward a few years, a lot of those groups basically don't exist anymore. A lot of those people have changed their tune behind the scenes. And I gotta say, for the last, I'd say 2.5 years, the most consistent example that everyone uses to talk about what is the appropriate way to build a financial publishing business has been Stansberry. And it's such a fascinating shift to me. I was had a conversation with Martin Weiss just a couple of days ago. And his father actually like formed the industry originally way back. It's like this great story. And he talks about this, like the idea that you actually have to be an advocate for the customer, and not from a marketing standpoint, but you have to actually care about what you're doing. And so when you go back and you say, oh, this might be corny, and we actually are thinking about how we can actually help and educate this, I don't think that's corny. It's like, I think this is one of those missing pieces in a sustainable business that a direct response marketer gets wrong so often.
Yep. No, it's true. It's true. And I can tell you, I mean, I've been here for several years now, and it really isn't lip service. It's an ethos. Like and even like in my role, when I look at opportunities, we sit down, and invariably the first question is how does this product or this business or whatever, how does this help our subscribers? Because investing is a lifelong endeavor, right? It's not a 6-month thing, right? And sure, you can go out and do a promo and get a bunch of names in the door, but if the underlying product is not thought out to help the subscriber, they're not going to renew. 1, 2, you're going to burn them, and that's not the kind of customer that we're interested in. We always say, we don't want the most number of subscribers. We want partners. We want people that are going to invest in the long term and be with us through various market cycles. Because I mean, even just in the last 20 years, we've seen ups and downs in all kinds of markets, and those subscribers that have stuck with us have consumed our research and followed our advice, have done well, and that's the most that's the most rewarding type of customer. I'd rather have a subscriber for I'd rather have one subscriber for 20 years than have 20 subscribers for 1 year. Right? I mean, that's really the way we look at it. And when you start your analysis of any opportunity, any new product launch or any acquisition or whatever with that mindset, it really does kind of make it easier. Because at the end of the day, literally they're your customers. They're the ones that you're supposed to be serving them. It's gratifying to see that theory has worked. Our first business in Beacon was obviously Stansberry, and we're going on 22 years, and so it's gratifying to see that actually works. And I think I think that it's easy, and it could be tempting to just take the quick hit. But if you genuinely take care of your customers, it's a slow, steady growth over time, and that's how, and then that just creates all kinds of other opportunities.
Yeah, and that's where, like, when I think about the opportunity that we represent, because I would say outside of like the IRA 401k world, that the publishing industry is probably the only other industry that has aggregated at scale the individual retail investor.
That's right.
And I mean, wealth management is the other one, obviously, like that, but that kind of like more traditional kind of retirement plan. But other than that, and particularly on an online environment and digital environment, it's pretty much us.
Yep.
And I think that for me, like what we represent then is massive distribution channel to the retail investor for our own products. And also that's how I'm in my conversations and kind of a lot of the business dealings that I've had over the past couple of years. It's how the other areas of finance are starting to view us, particularly in things like the crowdfunding and Reg A space. That's very much requires a large retail investor kind of reach in order to make that viable. Right. And so that kind of puts us in this weird spot where we've been this traditionally a very niche industry. But now, because of this shift in basically the structure of the market participants, we're kind of elevated to a point where we are one of probably the primary influencers in one of the most important segments in the market.
Yeah, I think that's right. I mean, it's a great time to be in this industry because, you know, we serve obviously the retail investor, and the retail investor now in the last few years has really become a major voice and a major force, if you will, in the investing world. And I mean, the examples, I mean, they're not stories that necessarily have good endings, but the examples that we saw earlier this year are a perfect example of that. You know, it's a real force. I mean, when you're talking about, you know, there's 63 million self-directed investors in the United States, and that number just keeps growing. So when you think about that, and you know, and they could be people who have $1,000 in their account or $10 million in their account. There's lots of people that, you know, even though they have the size of their account to be able to, you know, work with one of the big investment banks, they just prefer to do it themselves because no one's going to care about your investments the way you are, right? It's just I mean, that's true, and that's true in everything. I think, you know, no one's going to care about you the way you care about yourself. And so, to the extent that we can educate those people, and we have an opportunity to, you know, not only provide them good stock picks and good recommendations, but also just the overall, you know, risk allocation, you know, portfolio sizing, all the other things that go with, you know, managing your investments, which I would tell you are just as important, because only the individual can really say, you know, where they are in their life cycle in terms of, I can be more aggressive, or, you know, I need to really start thinking more about income, and, you know, that level of detail and the number of options that are out there as far as research products really provides a self-directed investor with all the tools that they need, you know, and that just didn't exist really to the level that it does today, you know, 3 decades ago. So and as a consequence, you're right. We as a distribution channel, if you think about our industry that way, really do have a big influence. But I also view it as, you know, we have a responsibility too, right? Like, you know, you want to put the right products in front of people, because you don't want to blow them up. I mean, that's just not, you know, that's really important.
And that's one of the things that, like, because one of the things that I saw really early in kind of the last few years is how much I want to call it the IR space, but it's a mixture of the IR space and I'd say like almost a pump and dump space. Because they get very, very, in the small cap, micro cap world, they get very intermingled. And how much they have really pushed over the years to try and penetrate different newsletters. And I've heard all kinds of horror stories from people who, like, their employees are taking compensation under the table to get the recommendation in, and I mean, things that could destroy the business, right? Like, and that's why, like, I think, like, those guys recognized early on that they could get, you know, influence on the stock by having it featured in a newsletter. But there hasn't really been like I'd say a channel where, like, there's an open, clean way for those kind of communities to connect outside of just sector specific events. And that's why we actually put an event platform together in Baltimore pre-COVID. We're bringing it back. But it's basically that. It's like, how can we bring people, like, just mash these places together in an open way where people know who's talking to who, and it's clean, it's open. Because those guys see it. The investment bankers that I talk to, they see it in terms of, like, when they have companies to IPO, they need retail distribution. They need it. They can't make these things successful anymore a lot of times unless they have somebody to talk to. And so they're much more. So what it creates is a situation where like we have much more, like we're influencers basically in the industry, and they're so willing to engage and come talk and find out what do you want to cover, what kind of companies. And I think it actually impacts the banker's decision sometimes on what companies they're willing to underwrite. Mm-hmm. If they think that this isn't something that we can get covered, especially if it's a Reg A. Like mm-hmm. It's like if we can't get, if an editorial team isn't actually going to recommend this, it becomes really difficult for them to underwrite it, because in those markets, the bank itself, their kind of traditional institutional like network mm-hmm. is much less important, and so it's changed their fees on underwriting. Mm-hmm. Like they've lowered it for the companies, and so it's actually become a benefit to the companies because they pay less. They don't get one or two massive investors who can basically kick them out of their company.
Right.
And it's just it's a fascinating transformation in that space that I think that it's one of those unintended consequences of this kind of change.
I think that's right. I mean, that goes kind of to your point of the influence of retail investors, and that will become increasingly important. And that's what I mean by it's kind of our responsibility to put good research in front of customers, because they're the ones that are they're paying for that service, and so the service you need to provide is good research, right? And of course, no one gets it right all the time. I mean, even the best performing editor has bad picks sometimes, but it's more about the overall consistent delivery of good picks and obviously well reasoned research, right? Like they're to the extent that an editor has 20 or 30 picks over a year, and they look at not only the individual picks but also the macro the macro environment. Like all of those things obviously influence any investment, and it's and that I would say is the difference between sort of true financial research and just a stock pick, right? Like a stock pick you can get at a cocktail party,
right.
And doing it right will. I mean, we've proven that doing it, putting the customer first and doing it right over the benefits the customer and benefits the company over the long term, for sure. Much more so than any sort of one-off one-off pick or one-off promo or whatever it is.
Yeah, and it's interesting too, because in the publishing industry itself, I'd say over the last 20 years, we've seen a consistent march towards higher quality of editor and even like I did some work with Real Vision for a while as their head of publishing, kind of getting them kind of set up on some things. And they had a show called it was basically like an expert would come on and make a trade recommendation. And their best trade for the year, I remember when we were doing it, was from Ms. Schneider, who's from our space, not from a hedge fund, not from institutional. She's now she became one of the most popular guests because her trades kept working, as opposed to some of the institutional trades. And now she's on Fox Business News all the time. Like everyone wants to talk to her from that, and she's phenomenal. But it's really interesting to me because that used to be like, I remember there used to be these models, and there's still maybe there's a shadow of it left from back then, but like in the 90s, I would say like a lot of newsletter editors were really just like college graduates with no financial experience who could write. And they'd say, well, and that was kind of what they'd bring in, and people would train them to pick stocks, and some would work out and some wouldn't. But they weren't like, they didn't have that robust kind of analytical background.
Yeah, I mean, I think there's a lot of talent out there as far as analysts, right? And we see it in our business. We've had a lot of people that were in the hedge fund, investment management space. They've said, I'm tired of going out and having to raise assets under management. I just want to study the markets, and I just want to write and give my, share my thoughts with people. And so we've, over the last few years, we've really been able to attract a lot of folks from sort of traditional Wall Street into our space, because they realize I can reach a lot more people and I don't have to worry about all the other things that go with managing money, right? Mm-hmm. And I can tell my stories and I can go into deep detail, because the self-directed investors, by definition, are more curious, maybe more analytical. Like they want to take the time to understand the thinking behind a pick, not just not just give me a sort of a ticker symbol and a buy up to price. Like a lot of truly engaged do-it-yourselfers, if you will, they want to understand the why, and that's important, right? And so I think what you're seeing in our space, which is it's just another sort of tidal wave, if you will, that makes our industry really ripe for growth, which is, one, there's the rise of the retail investor, like we talked about. That's the obvious one. But also, there are people that in the sort of traditional Wall Street space that are realizing, man, this is a great way to reach a lot of people, to tell my story as far as whatever analysis they're doing on different opportunities or different stock or macroeconomic theories, and without the pressure of maintaining AUM and all the pressure cooker that goes with that. And then around that, we've also built, you have these really talented folks that from the perspective of a marketer or a copywriter, you're like, man, this is a, not to call our analysts products, but like, this is a product that I can sell. This is a story that I can sell. And then I just see it. When we bring people in, our editors in, our copywriters are like, that's a good story. I want that assignment, And so it's just kind of this, it's like this virtuous circle, right? Where the copywriters and marketers get really excited about the editors, right? Because it's an easy story, not easy, but it's a compelling story to be able to tell. And then the editors get excited because they have great copywriters and marketers that say, I finally can, they get me, like they can tell my story to a big audience. And there's a little bit of, I don't want to say rock star, but there's a little bit of, the editors and analysts, they're smart people, and the notoriety that comes with, writing to, having, hundreds of thousands of subscribers is a good feeling, right? And so it works for both of them, and it's just really cool to watch when it all comes together.
Yeah, and that actually leads me, because one of the areas I really want to talk about is kind of I'd say the B2B side, because you mentioned like a lot of these people who they're tired of raising money, they're tired of this, but at the same time we have like one of my basic core theses about what's happening right now in the general digital marketing environment is that in the B2B space across the board, the business development functions are increasingly kind of connecting with media and content models. And this is specifically true in financial. And so you have people like ARC who have, they got 52 billion under management, and they have this really strong YouTube channel, and they do a lot of media pushes. And we're seeing that kind of thing happen, I think, across the board. Funds, people who are raising capital, being able to go out on either some existing digital TV channel, like a CNBC or FinTech TV or Real Vision or somewhere else, get kind of their story out there and find a lot of people. And then with that, larger institutions creating their own digital channels and content channels, and taking that thought leadership role, but now looking at less of a, like, oh, we just have this positioning that we have on our website, but now they're starting to push it out, and they're starting to go and actually start to market in ways that we market. And so that B2B trend, I think, is almost as big as the other trends that we're talking about, that there's a shift in how financial companies are interacting with all of their biz dev functions.
Yeah, no, I think that's right. I think there's sort of two angles to that. you mentioned before the the influence that the retail investor as a group is having on the financial markets, and as a consequence, the traditional sort of side of the investment space is now looking to go directly to that. That was not the case before. It was not, they were not a player. It was all sort of inside baseball, if you will, and that's obviously changing. And so I think the traditional folks realize that, and and they're saying, we need to get out there and get directly to these, to this group of people. And obviously technology and the internet and all these things has made it basically really, really easy to do. So that's one, and that's sort of one aspect of it. The other aspect of it with respect to, because in some ways that's still B2C, right? But in terms of us being when I say us, I mean our industry being a channel, because we've had so much exposure, and that's the world we live in, is self-directed investors. We become a channel or a resource to the Wall Street folks that say, hey, help us get to this audience, right? And so that's one opportunity. But it's also the other way around too, John. Meaning, everyone thinks of traditional investment management as the Wall Street bulge bracket banks, right? The Goldman Sachs of the world, the JP Morgans, all that. But there's thousands of smaller RIAs that the people that are still managing money in their hometown, and they don't have the Citibank research budget, right? They don't have the Bank of America research floor or building, really, right, in terms of number of people. And so, but they still need quality research, and our industry can provide that, right? There's so, we feel like we know because subscribers have written in and they say, I'm a small RIA in St. Louis, and and you guys have made me look brilliant in front of my clients because I follow your research and it's done well for me, right? And so we know that that's a market segment that is certainly available to us, because they need the research and the tools. And if you're providing quality product, if you're providing really good research, and you have a track record of proven results, they're gonna come to you. So I do think there is an opportunity in that market for sure. I think the marketing and the approach and even the product offering is probably a little bit different. But that it's a market for financial research products, no doubt.
Yeah, and that's where I think the RIA opportunity is very big, and you guys have done some stuff in that space already, haven't you? Like you've already started to penetrate that market. You've done some acquisitions. Like, can you talk about kind of where your business as a whole is kind of looking at that in a little more depth, or?
Yes, yeah. I would tell you that for sure, our main focus has always been, and will, I would say always continue to be, the self-directed investor, just because that's the customer we know, that's the subscriber that we serve, and that's just a market that we understand. But I would say, on a much smaller scale, we realize that the what I would call the boutique RIA space is underserved in terms of research. They're squeezed out because they can't afford the multi-million-dollar annual research budget that the big banks have. But they can't do it on their own either, right? There's not enough time in the day. They need to meet with clients. They need to raise AUM. And so the research function, there's a void, and a lot of them have already subscribed to our products without us marketing to them. They've just found us, right? But we're looking at opportunities to make that more of a directed effort, right? And so and we have some, particularly in the area of our tools space, we've gotten a lot of really positive feedback from professional investors that our tools are exactly what they need, because they especially a lot of our sort of our technical tools, like TradeSmith, like Chaikin, those products are sort of a natural fit for the professional investors as well.
Yeah, that's such an interesting space. I think because I feel like when I think about our space, like I think about we have existing distribution and we have this understanding, but then on a skill basis, what we have is essentially the ability to acquire and engage an investor audience. And like with some of the work that I did with Real Vision and some of the work that I've done with a few other people, like we're seeing an increasing amount of, I'd say small institutional, actually large institutional too, attention on a lot of the media and content that's out there. And so we're seeing family offices subscribing to some, just traditional retail kind of newsletters. And then as people start to realize that they can engage family offices and hedge fund managers with content, I think we're going to see a dramatic increase in channels that are actually targeting those types of audiences.
Yep.
And I feel like our industry, like for a period of time, is going to be capable of either partnering or interacting with people doing that because of the unique skill set that we have of really like understanding how to engage people digitally and around investment ideas and themes. And so like I want to go in, like you mentioned Chaikin Analytics, and I know that was a recent kind of deal that you guys did in acquisition, and I was wondering if you'd be willing to kind of talk through kind of what they do, why you guys looked at them, and kind of just talk a little bit about that acquisition, if you can.
Sure. Yeah, I think yeah, that was a recent acquisition. We closed on that deal in January of this year, and a couple things I would say. One is the tools that they've built are well, they have a couple different versions of the tools that they've built. It's primarily around technical and fundamental analysis, and they've taken a lot of the complexity out of looking at stock analysis, right? And Mark Chaikin, I mean, he's literally been at it, I think, since the late 50s, and so he's sort of a legend, if you will, in the analysis space. And a couple things that we looked at. One is that the team were just they were good people, and by that I mean they're smart. They really understood, and they really understand investing. Obviously, I mean, beyond beyond sort of the regular metrics, if you will, and they had the same passion that we do about educating the retail investor, the self-directed, the individual investor, because Mark, having worked on Wall Street for decades, realized that there was this asymmetry of information, and with the online brokers making it much easier for individuals to trade, those people then needed tools to be able to do that. And literally, I think I mentioned this earlier. Like it started with, okay, here's the idea, guys. As far as Chaikin, and the first question was, well, let's run through the tools. How can this benefit our subscribers? And that sort of ethos drives what we do. And so we looked at it, and the tools were great, and we just thought, man, we need to get this in front of people because it's really good, and because of the sort of the technical nature of their tools, they've done a good job of simplifying the complex, but yet it's sophisticated enough that the boutique RIAs, a lot of them use it, and so we felt like that was a win-win in two ways for us. One is the product is just it's a really easy to use tool that our investors, our subscribers could benefit from. And two, we knew, and they already have a foothold in the self-directed space, but also in the RIA space. And so we knew that we could, with our infrastructure and our marketing team and copywriting team, we felt like they had a great story, and we felt like we could get it out there. And and that was that was sort of the thinking behind Chaikin. And aside from that, like, and in my view, this is really important. Like, they're just really good people and really easy to work with, right? And I think they felt that way about us, and now we're all on the same team, and it's great.
That's awesome. And what other, so like just going down into like kind of, since you are out there looking, you are looking for partnerships, you are looking for possible acquisitions, and you've done a few things that I think were really interesting, where you've taken somebody who's had a very relatively, I'd say a good but relatively small business,
Mm-hmm.
and brought them in on a partnership, and then basically kind of exploded it for them in ways that actually made them, I think if I remember right, they have obviously without the same ownership stake that they had, which might have been 100% before, but they're actually making more and doing less work in that kind of environment.
Yeah, I mean, I think the way that I think about it is, to run a business. I mean, this is true in any business, but obviously we're talking about our industry. To run a successful financial research business that's directed at the self-directed market, it's not just the research and the writing, right, or the tool. It's also the marketing, the copywriting, the compliance, the customer service, the IT and the business analytics, all of that infrastructure, which is quite frankly a big pain. And a lot of people across any industry, they just say, I want to do my craft. I don't want to worry about all this other stuff, right? Because that's the stuff that brings people headaches, and it takes away from the core of what they do. And so what we've done over the last several years is we've invested tens of millions of dollars into our infrastructure, into our tech stack, into our accounting, into our customer service, customer tracking, and into our telesales, and also into our copywriting and marketing. And so we built this great infrastructure. I mean, it took decades, right? It wasn't overnight. It took decades to build this great infrastructure. And so now you bring people in that have a great product, that have a great idea, that have a great story, and now all of a sudden the rest of their time is freed up, so they can focus again on their initial on their craft, right? And we take care of everything else. And that's where it just it works so well. I mean, it's kind of I don't want to say it makes my job easy, but it's what's the word I would use? It's just it's a natural fit. Like, hey, you get to do what you're really good at and what you like doing, and you don't have to worry about all the other BS, right? And we spent the money and the time to build the infrastructure with really good people, so that you get the best of the copywriters, you get the best of the marketers, and you can really, it's much easier to do that when you have scale, right? And obviously we couldn't do that 20 years ago, but today we can, because we have made those investments and made mistakes along the way, and learned and refined and all the rest of it, and it's definitely a win-win.
Yeah, that's right. And so when you right now, like when you're thinking about possible partnerships, when you're thinking about possible acquisitions, like what are kind of like I'd say like the criteria, or what are like your basic checklist to even begin to have a conversation with someone?
Sure. Well, again, and at the risk of repeating myself, like is the business we want to look at, is it the products or services or tools that they have, does this benefit the subscriber or any self-directed investor, right? And is this the kind of product or service that you can build a long-term relationship with the subscribers, right? We're not interested in in and out. Like, that's just not our business model, and that might work for others, but doesn't work for us. And one, two, is it so is it a product that would resonate, right? Two, are the people passionate and good at what they do, right? There's an old saying, find a job you like and you never work a day in your life, right?
Yeah.
Are the people that are that have built whatever target we're looking at, are they passionate about helping the subscribers, because if that's in their DNA and there's lots of people out there like that, then it just fits perfectly. And then that they're going to come into it with the mindset of, what other product or tool can I put in front of people that will help them? And education in our mind is a big part of that, right? And three, is it a compelling story, right? Like, is it something where our copywriters and marketers would go, that I can talk about all day long, and I can really build a great, I can deliver a great story because the raw materials are there, right? And I mean, I would say generally those are what we look for. We don't have a checklist per se. I don't I have that, but those are sort of conceptually what we start with, right? And then and then I guess to sort of more on a technical level, obviously financial research, subscription-based financial research and tools, right? Because increasingly people are using tools, and as far as content, it's I look at track records. That's really important, right? And I look at track records, and I look at sort of the, and I don't do this alone, right? Like when we look at a potential acquisition, I will ask some of our analysts, hey, would you, as a consumer of financial content as well, what's your view of this product, right? And actually, we get a lot of ideas. I get a lot of ideas as the business development person from our editors and analysts. They go, hey, I actually subscribe to this product when I do research for the things I'm going to do, and this guy's really good, and so it's kind of a nice it's kind of a nice sort of virtuous circle, and that's usually a pretty good ringing endorsement when our guys use it. Well, then it's probably and I say that because they're probably more discerning than the average person, because they literally do it every day. So I would say those are generally the things that we look for.
Yeah. And essentially, I love that master frame that on the business of like, what is actually good for the retail investor and the customer for everything. And it's interesting to me because when I talk to because I talk to all the I'd say sub 5 million trader educators and publishers that are out there, because I feel like that's just in terms of number of businesses, that's definitely the largest segment. People who have a lot of experience. It's usually somebody who's come from a more traditional background in finance and wanted to do something on their own. It's like a semi-retirement business sometimes, or it's a passion thing that they didn't feel that they could be their honest self about the markets in a larger institution, or they're just entrepreneurial. And the thing that I see the most is that all of those guys kind of are basically talking the way that you're talking, but from a position of why can't we grow? And so they're talking about like the good ones anyway. And there's with everything in the internet world, there's of course the kind of hucksters and shysters out there who are successful enough, but throw those people aside. I continually come across these guys and women who have something that is very legitimate, that is that they are passionate about, and this helps people, this outperforms this consistently. Look at it. How can these guys over here, especially pointing to like kind of I'd say the more marketing driven groups out there, how can they be making so much money with that product? Because I subscribe to that, and that's garbage. And yet their business on one promo is 5 times my entire year's sales, and they're so frustrated, right? Because they feel that that pain of I know that these people are selling something that is bad for the customer. It's bad for the retail investor. I have something that's good, and then they go through this life cycle because it's I know if they're their first year or two in business that there's no point. You can't talk to them about marketing or partnerships because they're going to have to go through this cycle of thinking, well, the product is amazing. That's all I need. Like people are going to buy it. Once somebody sees this and I tell them what it is, then
yeah, if
everybody,
it will come. Yeah.
right? And
Yeah.
so they have to kind of go through that pain process of marketing actually matters. Getting the story out correctly in a way that actually engages the audience is important to growing the business. Running the business is hard. And then because what happens is they get stuck, and it's usually like somewhere in the $1 to $3 million range. I've seen a lot of companies, they'll get one thing working for a couple of years with one media channel in a funnel that might work, and then they get to 5 million, and then it just that fatigues and they never get back.
Right.
And they end up with a high-paying job. And if there's a partnership, then it's even arguable on the high paying, but it's just enough that they can't do anything to spend, to grow. And once they get to that point, then it's like they're almost invariably looking for like, where's the right partner? And then that next conversation that I end up seeing is, okay, now I recognize that this group could sell me, but or could grow my audience. They could make me money, but I'm really morally uncomfortable with them. And so because they have that issue, like there's this really strong, like a lot of these entrepreneurs, like they really give a shit. They give a shit about the customer, and that's what makes them great.
Yep. That will never go wrong. When you care about the customer, that will never go wrong. And but you're right. Financial research, it's not bought, it's sold, right? It's not. There's kind of a running joke around here that people don't wake up in the morning and go, honey, we need milk, we need more newsletters, we need, like nobody does that, right? Like it's got to be brought to them, and it's got to be a compelling story, but it's also got to be a compelling story, but it's also got to be what's in the best interest of the subscriber, right? And so I think that's where that's why I love what we've sort of built here. And I personally certainly don't take credit because I've been here 3 years, right? But what the business has, what they say, overnight success takes 10 years, right?
Yeah.
In our case, 20, I guess. But over 20 years, we have built, because on the one hand, you got to have a good product that really serves the subscriber, right? But that's only half of the recipe. The other recipe is you got to have really talented marketers and copywriters that can take a story or take a product that understand financial research and go, that's really good. I can market that, right? And so we've built those teams, but there's always a big need there too, right? There's a need to provide our subscriber base with good product, but there's also a need for marketers and copywriters that are really talented, that know how to how to make a message resonate, right? And it becomes easier, I think, in some ways when the product is good, right? When the product or service is good. And so that's kind of what we look, what we try to do is create both of those, fill both pieces of that puzzle. And our I feel like our marketing and copywriting teams are really good, and also because now they're quite big. So there's a lot of, even within within our marketing teams or within our copywriting teams, when they sit in war room and they bounce these ideas off of each other, they just feed off of each other, and it's a great environment to then polish a story that we want or a promotion that we want to pursue. And it's just a really, and I think the proof is in the results, right? Like we've been able to really take businesses and either launch or buy and then build upon what other folks have done, and it's worked well, and it's a nice formula. But you're right, there's a lot of people there's a lot of really good products out there, and a lot of good analysts who just need a megaphone, right? Really, and that's with our investments over the years, I feel like we have a pretty good megaphone, and that that should just the way the business is set up, that should just continue to grow quite naturally. I mean, I say naturally, you got to work at it every day, obviously, but that's what's exciting about where we are, not only us as a business, but I think as an industry.
Yeah, I agree. I think that's it. So just for everybody who's listening, like Mark, I know you have your kid's graduation, so we're not going to be able to have you in person at the summit, which is why we're doing this.
I really wanted to go. There's some folks I wanted to see and all that.
But it was great seeing you in Jacksonville at the Accelerator, and I'm sure we'll see you again in some of the other ones.
Yep.
But for everybody who's listening, like who wants to connect with Marco, if you do care about your customer and you do have good products and you think there might be an opportunity to present a or open a conversation about how you guys might be able to work together, I'm going to have a survey link in the event app. It's a survey link, but it's basically we're looking to connect you guys. And so you fill that out. We'll send out an email form too for everybody. Also in the room, like everyone, as usual, can always grab me, reach out to me with email. I'm happy to make an introduction. I'm really looking forward to kind of seeing what comes out of it. But I think that I'm really excited how you guys are out there actually looking to do more deals. Like I said, your recent SPAC has shaken a lot of people out of some complacency too, and to realize that they have a lot of other opportunities. And I think that I think there's a ton that's happening, and you guys are doing so many exciting different things that I'm sure that a lot of the summit folks will probably be interested in having a conversation.
Yeah, that'd be great. I'm certainly open, and just to sort of round that out, as I mentioned, there's sort of two pieces to the puzzle. There's the good products that we want to put in front of our customer base, but there's also good marketers and copywriters that tell that story. So I mean, we're always looking for products that and services that we can put in front of our people, but also we have a lot of products and services now, right? And so we could always use more copywriters and marketers that are excited about having a great story that they can tell. And so that's we're just continuing to try to build the business and help lead in building the industry.
Awesome. Well, I appreciate you taking the time today, Marco. This has been really great, and we won't see you at this summit, but I'm sure we'll see you at the next one.
Yes, no, for sure. And yeah, thanks for reaching out. And I really am sorry to miss the summit.
Oh, not at all.
I enjoyed it, and but I know there'll be others for sure. So that's great.
Yeah, that's the thing. It's like families first on everything.
Yeah. Thank you. No, thanks for. Yeah, I agree.
All right. Well, thanks so much.
All right. Take care, John.